According to Funstrat and this clip that we will play in this video, the bottom is probably in. That means the bottom is probably in for Tesla as well. As Tesla is trading around $238 per share, things get dicey on the downside if Tesla stock were to continue to fall. Here in this video, we're going to go over what I think is coming next for our markets and for Tesla stock. Now, Tesla has not exactly done great since announcing Q4 deliveries, although we have gotten a lot of price target increases. We've gotten a lot of exciting things that have happened in Tesla. Tesla stock's actually oversold right now. It's not too often Tesla stock actually goes oversold. So we'll talk about that here in this video. We'll look at what Wall Street is saying about Tesla. We'll also take a look at the option chain around March, April, May-ish, and see where options are implying Tesla stock could be. But really the bottom line that we'll also talk about in this video is, do I still think Tesla stock is going to make all-time highs this year? Or maybe has the last couple of days, the rough start to 2024 we have seen so far, change anything? You guys want to spread this information far and wide to as many investors as possible that probably need to hear this. So first things first, we'll actually take a look at the option activity for Tesla stock and see what options are implying. And it's pretty fascinating, actually, that the near term for like January is very bullish. The $300 call has 78,000 for open interest, 8,000 for volume today. The, let's see, the 250 call has about the same, about 89,000 for open interest, 7,600 for volume today. The 260 call has open interest of 45,000 and volume today of about 7,500. By far, these three options, which are all calls and, you know, pretty decently out the money, at least for the $300 call, well, they're very bullish. There's very bullish near-term position taking in Tesla stock. When you look at March 15th, that's a little bit further out here, about 70 days out, not too crazy far. The $300 call seeing a lot of activity as well, but you are seeing a lot of activity around the $200 put. Also, $600 call has as one of the highest open interest here at about 30,000 as well. So from now until March, it looks pretty bullish. When you get to April, pretty bullish as well. The 240 call has a lot of activity with 38,000 for open interest. Once you get to May, things look a little bit more worrisome, I guess, with the options chain. That's probably because right now it's just hedging that's going on. Not a lot of traders are actually in here. So I think the near-term option activity is a little bit more telling, which is extremely bullish. But once you get to May, you do have a lot of activity around the 170 put, which doesn't look too great. Once you get out to June, the $400 call has about 40,000 for open interest. $300 call has 24,000 for open interest. Even the $758 call has about 21,000 for open interest. So it's very interesting. Here in the near term, Tesla option chains are very bullish. In the medium term, not so much, specifically around that May expiration. Once you get to June and you start to go beyond, it starts to look a little bit better, especially for January of 2025. Lots of option activity here. But in the very near term, it actually looks pretty dang good for Tesla. I should also remind you that if we do get a big rally in Tesla, whether it's the India factory being announced, whether it's FSD entering the Chinese market, these are catalysts that we expect some point in January. Wouldn't surprise me if maybe FSD entering China is like a February catalyst. But here in really next week, next 2 weeks or so, you're expecting that India factory to be announced. Don't be surprised if Tesla shorts are really caught off sides by a big move higher in Tesla stock. Tesla continues to be the most heavily shorted stock on our markets with $20.32 billion worth of short positions. Tesla is over 2% of the entire stock market short interest. So yeah, if Tesla makes an aggressive move higher, especially after falling so much recently, well, that could just make an upside move that much more aggressive because they're caught off sides. And I guess that's a beautiful thing because we know the Indian factory is coming. We know FSD is going to enter the Chinese market here in the next 1, 2, 3, 4 weeks or so. Wall Street doesn't understand that. They don't know that's coming yet. You would think so. You would think that would be priced into Tesla stock. But mark my words, when Tesla announces the India factory, when Tesla announces FSD entering the Chinese market, these are going to be huge catalysts, and everyone's going to be like, oh my gosh, wait, this is great news. Even the bears are talking about, the bearish of the bears are waiting for the Indian factory. And little do they know it's going to be announced here very shortly. So I think you are getting a little bit of a heads up here in this video, and by the news that we've gotten recently, very clearly showing we're about to get those two catalysts being announced, that Wall Street just doesn't realize yet. Now take a listen to what Fundstrat has to say about our markets here in 2024. Keep in mind that Fundstrat was the only firm that got 2023's market rally correct, and they do think small caps are going to be the outperformer, which is not Tesla. Technically, Tesla's not a small cap company. But the reason they think small caps will outperform is the fact that they are still beaten down with low valuations, and they're interest rate sensitive, right? And obviously, if we avoid a recession, well, that's going to be great for small caps. Tesla's in that category as well. It's not a small cap, so it doesn't have that criteria, but it does have more safety than small caps, which I think is very valuable, and I think the markets will come to value that. Tesla has interest rate sensitivity. It's economically sensitive, so if we avoid a recession, that's probably not priced in, and Tesla stock's still down 40% from highs.
Our next guest has an S&P year-end target of 5175. It's about 10% above where things currently sit. Joining us now for a closer look at what he's seeing in the charts, Mark Newton, Head of Technical Research at Fundstrat. Mark, good morning.
Thank you, Mike. Good morning to you.
So we have what seems like perhaps overdue and somewhat controlled pullback, I guess, going on in the indexes. The S&P off 2+% from its recent high, had 9 straight up weeks. Everyone said market was overbought, overheated, it's got to cool off. Is that what's going on? Do you expect it to continue to be routine?
Yeah, I think the narrative had probably gotten a little too complacent heading into year end. That's normally the case, seasonally speaking, but people were a bit over their skis in terms of the thinking of disinflation and the labor market easing. The bottom line is that the data has been inconsistent with that view. It's been quite resilient and strong. The pullback that we've seen hasn't been all that technically damaging to the market. We've seen a necessary mean reversion in some of the former leaders like technology. But meanwhile, we've seen other groups like healthcare, which have recently started to outperform. So I see this completely as being very healthy. And if anything, it's going to be a chance to buy for investors in the days ahead, and potentially as early as today after the jobs report.
Yeah, there is certainly a lot of rotation within this index retreat going on. A lot of excitement, I guess, about the slight catch-up move in small caps and the broader list of stocks against the very largest ones. Do you expect that to continue? Or, we have something like Apple down 8% off its high. It's down a lot more than the market is right now.
I do like small caps for 2024, Mike. I think a lot of these groups which have been out of favor are slowly but surely starting to show evidence of coming back. And small cap certainly is a group that should do very well as rates start to pull back. And my own thinking is that the 10-year likely gets down to 3.25 this year, potentially as low as 275. So that certainly would be a good thing for the small cap arena at a time when they have really underperformed pretty dramatically for years and years. And so this will be a necessary period of catch up, which happens this year.
I mean, that would suggest that you think treasuries are a pretty strong buy right here, right? With the 10-year at 4. Is that just based on the patterns that you're witnessing, or does that embed some, rate cut assumptions or what inflation's going to do?
I don't think it's going to be a straight line. We've already seen, over 100 basis points or so of pullback in the 10-year of late. And so it's not going to, I think in general in the first quarter, we probably will see a little bit of a bounce in treasury yields. But my own thinking is that is going to happen between likely the spring of this year, probably into the late summer. And a lot of that is predicated on cycles that I look at with 10-year yields starting to pull back pretty aggressively. So, the good news is, look, the U.S. is in much better shape than most of the world. And so that's obviously a very good thing. But my thinking is we are going to see a continued retreat in yields.
You've mentioned that the S&P might actually sort of run its course in terms of this pullback, even as soon as today after the jobs report. At what level would you suggest that this is showing itself to be more than just an orderly little pullback that you'd want to buy?
Yeah, that's a good question. Look, I think anything under 4,600 would be certainly a concern for short-term bulls. But the bottom line is that we've seen such a huge period of catch-up in broad-based participation in many of the sectors which have lagged so substantially, and so it's really right to concentrate on the degree of which all these other sectors are beginning to join the rally and buoy the market at a time when technology has started to pull back. So, if anything, it's a very healthy rotation. Look, we have close to 80% of all stocks above their 50-day and 200-day moving averages. Things have gotten pretty overdone with regards to breadth. Momentum, though, arguably is really not that overbought, and that's the key.
So yeah, Fundstrat actually thinks the bottom might be in here, at least in the near term, as momentum has really shifted from being overbought. Now you're neutral on IWM. The RSI is at 52.90. You are precisely neutral. For the S&P 500, the RSI is at 56.27. Pretty much neutral, maybe not technically neutral, but pretty close to being neutral. And I mean, that would make a lot of sense, as we have not had a single green day in 2024 that has been substantial yet. Besides today, well, we had a slight green day, but nothing that's even close to comparing to some of the sell-offs that we have seen so far in 2024, especially for small cap stocks that have kind of gotten rocked here to start 2024. Goldman Sachs says, quote, "We continue to expect 3 consecutive 25 basis point cuts in the Fed's funds rate in March, May, and June on the back of lower core inflation, followed by quarterly cuts to a terminal rate of 3.25 to 3.5%. Currently, markets are pricing in a 70% chance that the Fed does cut in March, a 6.1% chance that we get a 50 basis point rate cut in March, and about 24% chance that we get no change at all. So the consensus is for sure that the Fed's going to cut in March. It's actually interesting because yesterday there was 60.5% odds of a rate cut in March. Following a hot jobs report like we got today, the odds actually increased about 10%, mainly due to some of the other weakness we've seen in ISM services and some of your other data. You also did see the last 2 months jobs reports get revised down by about 71,000 jobs, so maybe it wasn't that good if you strip out certain things from the jobs report after all. Cap Econ says exactly that. The jobs print, quote, "was not quite as good as it looks at first glance. Besides the negative revisions, the gain was once again concentrated in only a few non-cyclical sectors. The 33,000 decline in temporary jobs is also a concern. That could be partly why the markets sold off at least part of the day today, and why your odds of a rate cut in March actually went higher." Bespoke Invest here on X says this is the S&P 500 tech sector's 10-day advance to decline line that has swiftly moved down to oversold territory this week. So you were really overbought, and now you're back to being oversold. The last time you were oversold was in October and the beginning part of November, and you see what happened then. So we are susceptible right now to a pretty violent bounce back on any good news. You can't leave out U.S. Treasury Secretary Janet Yellen. She says, quote, "What we're seeing now can be described as a soft landing." But as you can see here, it usually starts with a soft landing. These articles are archives from Bloomberg, International Monetary Fund, and the New York Times, and they were all this one was July 23rd, 2000. It says cleared for a soft landing. Clearly that didn't happen. The IMF said soft landing ahead for the U.S. economy. That was on August 6th, 2007. February 15th, 2007, Fed chairman projects soft landing for U.S. economy. You get the idea. Things can change pretty aggressively, but there's normally a catalyst that causes it. 2000, right? .com bubble, everyone invested in bad companies. It would be like if you invested in the worst companies of 2021 and you put most of your portfolio in there, the indexes were weighted towards the worst companies in 2021, and obviously, where are those companies at now? They're either bankrupt, going bankrupt, not doing well. You get the idea, right? That was a big catalyst back in 2000. The mortgage problem, subprime mortgage crisis was obviously a big problem in 2007 as well. So not every time's going to look the same, but it definitely looks the same right now. We just don't have that centralized problem that so far is pushing us into a recession. And I think that's the bottom line here. As long as we avoid a recession, as long as we avoid some kind of black swan event that is very negative for our economy, ultimately negative for the labor market, then we're probably A-okay in Tesla. We're probably okay in the markets, especially where I like right now, the small and mid-cap areas, the beaten down sectors of our markets. If recession fears come, again, Tesla stock will not perform well. And if recession fears or a recession does actually materialize, I would expect Tesla to be in the low 200s to end 2024. So I wouldn't expect anything too great from Tesla stock, and you could undershoot that at one point and then probably end around $200. My base case still remains $450 per share for Tesla stock. I see Tesla stock hitting new all-time highs in 2024, but you have to see margins getting better. You have to see Tesla beat the numbers, right? EPS beat the numbers. You want to see some multiple expansion as well. If Tesla can come in higher than consensus, which is currently at $3.97 for EPS for 2024, if Tesla can come in around $4.50, which I don't think is going to be too terribly difficult, and you get like 100 times multiple, which is still historically very cheap for Tesla, then you're at $450 per share. That's the simple math behind it. I still think in a best case scenario, if all of those things happen, plus inflation continues to fall, plus the Fed can cut rates more, maybe a little bit more multiple expansion, Tesla's able to raise prices, consumers find, which, maybe can include a $25,000 vehicle announcement, FSD entering China, India factory, progress on the $25,000 vehicle. I mean, maybe a licensing deal for FSD. If those things happen, Tesla stock's probably going to $600 or higher. I still remain committed that 450 is not an easy target, but not too outrageous of a target as well for this year. Now, when does that happen? When does Tesla actually start to rally here in the near term? I think we want to at least get big tech earnings out the way. We want to get Tesla earnings out the way. We want to get Netflix earnings out the way. We want to get Apple, Microsoft, Google, Amazon earnings out the way. As long as those earnings hold up, which, I mean, the expectations are high, so keep that in mind. But as long as we meet those expectations, then I think Tesla stock can rally a lot more. Tesla will report earnings on January 24th, and that's obviously going to be a huge catalyst, especially the earnings call. And at that point, you might start to see analysts raising price targets, especially considering the Indian factory should be announced by then. So I think this could set us up for a pretty aggressive rally here in Tesla stock, as hedge funds and institutions are really underpositioned in Tesla when it comes down to it, and not exposed for an upside move in Tesla. I mean, that short position is huge. And I think consensus right now, just given Tesla stock has declined for 1, 2, 3, 4, 5 days in a row, is not the greatest for Tesla right now for 2024. And I think Tesla will, as we've talked about before, pull a rabbit out the hat here in 2024. I think just expectations being way too low for Tesla doesn't make the bar too high in the grand scope of things. So let me know what you guys think down below in the comment section, but I do think Q1 may be a little shaky until we get clarity on the economy, clarity on earnings, clarity from the Fed itself on January 31st when they have their next Fed meeting. After that, I think stocks can really start to rally. I imagine this Fed meeting in January, Fed Powell is going to make it very clear that they're either not going to cut rates in March or more than likely going to cut rates in March. So I think maybe that could even spark a larger rally as well. I believe Apple reports earnings on February 1st. Don't quote me on that. I don't think it's officially confirmed yet. But after Apple reports earnings, if that is okay, then I think you have a little bit more room to run here. And that run, in my personal opinion, could send you over $300 per share. Let me know what you guys think down below in the comment section. Hit the like button as well as subscribe to the channel as well if you made it to the end of this video. If you guys want to come trade with us live in real time throughout all of 2024, hopefully hit some big trades like we did in 2023, check out that link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.